Big moves are happening in the tech sector today, and the momentum is absolutely massive. We are tracking Portside Wealth Group LLC as they just ramped up their position in Alphabet Inc. by 5% in a major fourth quarter play. It is a bold move that highlights just how much institutional confidence remains behind the search giant even as the market shifts and evolves.
Tired of dropping your phone or struggling to prop it up? Meet the Pop Sockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Next up, we have eyes on V-Square Quantitative Management LLC, which has officially declared Alphabet Inc. as its fifth largest holding. They have aggressively lifted their stake by over 18%, showing they are betting big on the future of this information services powerhouse. This is a significant indicator of where the smart money is flowing for the next fiscal cycle. The buying momentum does not stop there because Newbridge Financial Services Group Inc. has just reported a 20% boost to their own stake in Alphabet Inc. as well. With hedge funds and financial groups loading up across the board, it is clear that analysts and institutional players are positioning themselves for what comes next. You need to stay ahead of these filings to see where the real growth is hiding. Finally, we have a massive energy shakeup as NiSource teams up with both Alphabet and Amazon to fuel the next wave of AI data centers. This massive deal aims to power the future of artificial intelligence while promising to save everyday households over $100 a year in energy costs. The intersection of tech and infrastructure is the biggest story in the market right now, so make sure you smash that like button and subscribe to the channel so you never miss a beat. Click that bell icon for real-time updates and join our community of savvy investors today. Is Alphabet still the titan to beat in your portfolio, or are the pros shifting their focus elsewhere? Let's dive into the latest moves surrounding GOOGL. Big money is still flowing in, with Portside Wealth Group LLC recently boosting its stake by 5%, making Alphabet a key part of their holdings. They aren't the only ones. A wave of institutional players, including Members Trust Co. and lifelong wealth advisors, have also been quietly nudging their positions higher. Right now, over 40% of the company is held by these institutional heavyweights, showing that despite the noise, the smart money is still deeply invested in Google's parent company. But it's not just about the buy orders. Wall Street's analysts are currently buzzing with optimism. We're seeing target prices climb across the board. Piper Sandler and Phillips Securities are both pushing their targets up to $395. With a consensus rating of moderate buy and a target price hovering around $367, the street clearly sees more runway ahead, especially after Alphabet crushed expectations in their latest earnings report, posting $2.82 per share and raking in over $113 billion in revenue. However, it's not all sunshine and roses. We've seen some significant insider selling recently, with directors Francis Arnold and John L. Hennessy offloading shares. While insider selling can look alarming at first glance, it's often just part of standard portfolio management, though worth keeping an eye on given the scale of recent activity. So, what does this mean for you? With a massive $4 trillion market cap and a debt-to-equity ratio that suggests a rock-solid balance sheet, Alphabet remains a foundational tech giant. But remember, the market is always evolving. While analysts like Alphabet, some top-tier firms are currently whispering about 5 other stocks they believe offer even more upside right now. Do you think Alphabet still deserves the crown, or is it time to diversify into those hidden gems? Let us know your take in the comments below, and don't forget to hit that subscribe button for the latest market updates. In a world of fast-moving data, staying informed is your only real edge. Stay tuned. Ever wonder what the big institutional players are doing with their portfolios while the market keeps you guessing? Today, we are diving into the latest moves surrounding tech titan Alphabet, specifically focusing on V-Square Quantitative Management. They just made a major statement, boosting their Alphabet holdings by over 18% in the fourth quarter. When a firm like V-Square earmarks 3.3% of their entire portfolio to a single stock, making it their 5th largest position, it tells you they aren't just betting on the company, they are betting on its dominance. It is not just them, either. From imprint wealth to retirement wealth solutions, Institutions are clearly positioning themselves, with over 27% of the stock now sitting in the hands of major funds. But let's look at the analysts. They are practically singing in unison. With firm buy ratings coming from giants like JP Morgan and a consensus target price sitting well above current levels, the street is clearly bullish. Why? Because the numbers speak for themselves. In their latest quarter, Alphabet crushed expectations, pulling in $113.8 billion in revenue and beating earnings estimates by 23 cents per share. With a massive 32.8% net margin, it is clear that the machine is running more efficiently than ever. Now, you might have seen the headlines about insider selling, specifically from major shareholders and executives, which is bound to raise a few eyebrows. But look at the bigger picture. With a market cap pushing into the trillions and a consistent growth trajectory, the scale of this company is staggering. Whether you are looking at their rock-solid balance sheet or their position as the backbone of global search and advertising, Alphabet remains a massive force. However, even with all that blue-chip appeal, you have to ask yourself, is this the best place for your capital right now? While Wall Street loves Alphabet, some top-tier analysts are currently pointing their clients toward 5 other stocks they believe offer even more upside potential, stocks that aren't even on the Alphabet radar. If you want to know what those hidden gems are, click the link in the description to see our latest analysis. Remember, in a market this fast, being informed is the only edge that matters. What is your take? Is Alphabet a long-term hold, or is it time to look elsewhere? Drop a comment below, and don't forget to subscribe for more deep dives into the stocks moving the needle. Is Alphabet still the king of the tech hill? The latest moves from Wall Street suggest some very big players think so, but it is not all sunshine and rainbows. First, let's talk about the big money moving in. Newbridge Financial Services Group just upped their stake in Alphabet by over 20%, grabbing nearly 2,700 more shares. They are not alone, either. Institutional heavyweights like CIBC and Wright Investor Service have been busy building their positions, showing that the smart money is still betting big on the Google parent company. In fact, institutional investors now control over 40% of the firm. Analysts are feeling equally bullish. With a consensus rating of moderate buy and price targets climbing as high as $400 from firms like Needham, it is clear the street sees plenty of upside. However, there is a flip side to this coin. We have seen significant insider selling recently. Over 2 million shares have changed hands from insiders in the last 90 days, including substantial sales by key figures like John Kent Walker. While some might view this as a red flag, it is worth noting that it represents just a fraction of the total holdings, and the company's fundamentals remain rock solid. Speaking of fundamentals, Alphabet is an absolute powerhouse. They crushed recent earnings estimates with an EPS of $2.82 and a massive $113.83 billion in revenue. With a net margin north of 32% and a return on equity at 35%, they are firing on all cylinders. And for those investors looking for a little extra, the quarterly dividend is just the cherry on top. With a market cap hovering around $4 trillion, Alphabet remains a foundational pillar of the global economy, even as it pivots into cloud computing and beyond. But here is the million-dollar question. With so many other emerging sectors, is Alphabet still the best place for your capital? While analysts love the stock, there are whisperings of even hotter opportunities flying under the radar. If you want to stay ahead of the curve, check the link in the description for our exclusive research on the top stocks that Wall Street is whispering about right now. Before you double down on your portfolio, ask yourself, are you following the crowd, or are you looking for the next big disruption? Smash that like button if you found this breakdown helpful, and let me know in the comments. Do you think Alphabet will hit that $400 mark this year? Imagine if the massive hunger for AI could actually lower your monthly energy bill. It sounds like a total contradiction, right? Usually, the more power these data centers suck up, the more we pay at the pump, or in this case, at the plug. But NiSource is betting big on a different narrative. The company just announced a major partnership with Alphabet and an expansion with Amazon, aiming to power the next generation of AI data centers in Indiana. And here is the kicker. They are promising that residential customers could actually see their bills drop by over $100 a year. NiSource is utilizing a unique GenCo model, essentially creating dedicated infrastructure for these tech giants so that their massive energy needs do not end up being a tax on your household budget. It is a bold move, especially at a time when policymakers across the country are sounding the alarm. With data center power demand expected to skyrocket by a staggering 220% by 2030, regulators are nervous that our grids simply cannot handle the load. Yet, NiSource is projecting over $1 billion in system-wide savings. If they can pull this off, it might just be the blueprint for how we reconcile the AI revolution with the reality of our aging energy infrastructure. Wall Street seems to like the sound of it, with shares ticking up on the news. But what do you think? Is this a genuine solution, or are we just fueling a fire we cannot control? Drop a comment below to let us know your take and hit that subscribe button to keep up with how tech is quietly reshaping your wallet. Sometimes the biggest shifts happen in the fine print. Make sure you are the one reading it first.